Let's take a look at the auctions around the country. There's about 4,400 homes up for auction this weekend. Starting in Sydney, about 1,300 properties will go to auction, with another 268 around regional New South Wales. Melbourne tops the list once again, with 1,769 auctions and another 106 auctions around the state. Brisbane has 216 auctions, with an additional 192 homes going to auction around Queensland. Adelaide has 287 and Canberra has 185 auctions. 44 Grandison Street, Moonee Ponds tops our most viewed properties going to auction this weekend's list. It's a big 5-bedroom, 3-bathroom home built on one of the largest plots of lands in the Melbourne suburb, over 1,100 square metres. And it's not going cheap, with a price guide of $3.8 to $4 million. Second home's also from Melbourne, 8 Norman Road, Croydon. 30 Edmund Street, Norwood in South Australia comes in third. That was our top listing last week. Also in South Australia is 6 Panton Crescent, Somerton Park, and 19 Indus Street, Camp Hill in Queensland. That rounds off the list. On to this weekend's top listing, which comes from the Dandenong Ranges just outside Melbourne. This property is a little different. It's made from 1920s Victoria-era railway carriages known as Red Rattlers, giving the home a distinct look and layout. The home has had a colourful history, operating in the past as an art studio, a restaurant called Choo Choo's, and a bed and breakfast. 1954, it was purchased by sculptor Hans Knorr, and some of his works remain on the property. In 1956, the Von Trapp family singers of Sound of Music fame accepted an invitation from Mr. Knorr and visited the property. The house has been recently renovated into a spacious home with 4 bedrooms, 3 bathrooms and 3 living rooms, located on just under 1 hectare of land. Price guide of $1.5 to $1.6 million. This property is just waiting for a train enthusiast to buy it.
This program is brought to you by realestate.com.au, Australia's #1 address in property. With more properties for sale than anywhere else, we make it easier.
Well, joining me now is Anne Flaherty, economist at REA Group. And about 4,400 homes up for auction this weekend. That's more than 100% higher than last year. Seems like another massive weekend ahead for property sales.
Yeah, look, buyers are spoiled for choice this weekend. We actually have more properties going up for auction this weekend than any other weekend so far this year. Now, it's not really that surprising if you consider that we're heading into the Easter school holidays. So we know that a lot of vendors are looking to sell up before Easter hits. So, you know, if we compare to the same time last year, it actually was Easter over the same week last year, which is why we see such a huge year-on-year growth. Following this week, the first week and the second week of the Easter holidays, we're going to see significantly less activity. There are far few properties coming up for auction after this coming week.
Yeah, so we've obviously got the Easter break, Anzac Day, then we've got the election campaign. So property will start to drop off then. There'll be less properties for sale coming up over the next few weeks.
Yeah, definitely. Look, with the Easter holidays, people won't be selling as much. We often see a bit of a lull in activity around the time of a federal election. This election may not have as big of an impact on people's decisions to buy and sell their homes, however. There aren't as many policies in the upcoming election that are likely to impact the property market as there have been in previous years.
Let's talk about regional areas. During COVID restrictions, a lot of Australians moved out of the cities into the regions. What impact did that have on regional property prices a couple of years ago? And what's happening to prices now that COVID's coming to an end?
Yeah, I think one of the biggest stories over the last few years has been the impact of the pandemic on regional property. We saw some regional areas witness price growth upwards of 30% in just 12 months, extremely strong price growth. Now, what we are seeing across the board is that a lot of these areas that saw this incredibly strong price growth are now starting to slow. And when I say slow, I don't mean that prices are falling. What I do mean is that the rate at which prices are rising has significantly slowed. So if we look at areas like Richmond Tweed in New South Wales, which is home to Byron Bay and has seen the strongest price growth over the last 12 months, price growth peaked in the end of last year. And we've seen this in other markets as well. So it seems to be that from the start of this year, that price growth is starting to slow. If we look at Victoria, areas like Geelong and the Mornington Peninsula have also seen some sloth. So have areas like Bunbury in Western Australia, for example. Where we are seeing a little bit of a different story, is in Queensland, where while peak prices seem to be, price growth seems to be at its peak level, it hasn't taken too much of a slowing yet in Queensland.
And what's happening with stock levels in regional areas? Is stock levels still high, or is there is it more just bidding process at auctions may not be as fierce as it was in 2020 as well? Is that a driver too?
Yeah, it's definitely a driver. I mean, buyer demand in regional areas is still extremely strong, but it is starting to come back very slightly. Having said that, we still have far lower stock levels compared to, say, pre-pandemic levels. So there are less houses to buy, less houses to rent, and this is contributing to this continued price growth. But again, it's not at the level that we saw, say, 12 months ago.
And Anne, just really quickly, the big four banks now expect rates to rise in June. What's REA's view?
Yeah, look, it's an interesting one. I think one thing that's worth noting is that regardless of when the RBA pull the trigger, the fact that the big four banks expect rates to rise is already having an impact. For example, we've seen fixed interest rates rise for, since the end of last year now. So fixed interest rates are already higher. Consumers also expect a rate rise, and people are already factoring that into their decision making. So I think that regardless of exactly when the RBA moves interest rates, the market is already factoring that in and responding to that expectation.
Thanks, Anne. Well, Anne Flaherty, thanks so much for your time. Appreciate it.
My pleasure.